Hey everyone, Coach Investor back to another video for today. So let's go over AMD's earnings report. They beat on earnings per share and revenue estimates, so that's good. Though, if you might look at the stock right now after hours, even though it doesn't really make any much sense because it can go up, then can go down pretty quickly as well. Stock is down 3% or so at the time of making this video. Now, although the majority of the metrics are down year over year, they see some improvements in the second half of this year, which should be of comfort for investors. We've seen that also with Intel, for example. Maybe that's why Intel stocks reacted positively, because we see some improvements in the second half of the year for Intel in the second quarter already. Now I'm going to go over a couple of comments here from AMD's CEO. So as she says here, we executed very well in the first quarter as we delivered better than expected revenue and earnings in a mixed demand environment. We launched multiple leadership products and made significant progress accelerating our AI roadmap. Of course, AI has to be mentioned, and customers' engagement in the quarter. Long term, we see significant growth opportunities as we successfully deliver our roadmaps, execute our strategic data center and embedded priorities, and accelerate adoption of our AI portfolio. Our strategically important data center and embedded segment contributed more than 50% of revenue in the first quarter, so pretty significant. And this is a comment by AMD's EVP CFO and Treasurer Jean Hu. For the second quarter, we expect sequential growth in our data center and client segments, offset by modest decline in our gaming and embedded segments. We remain confident in our growth in the second half of the year as the PC and server markets strengthen and our new products ramp. So as you know, markets are always forward-looking, so this is probably well received, even though the stock will react however it will react. We've seen this with SoFi recently as well. Again, it doesn't really matter what the stock does in the short term, as long as the business performs the way it should, and maybe even exceeds expectations. That's all that you should be looking for. Now, before we jump into the earnings report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. All right, so let's jump right into this. Revenue, it's down 9% year over year to $5.4 billion. It's also down quarter over quarter. If you look at gross margin on a GAAP basis, although it's down 4 percentage points year over year, it's actually up 1 percentage point since Q4 and 2 since Q3. And on a non-GAAP basis, it's down actually quarter over quarter 1 percentage points, and year over year 3 percentage points, basically flat since Q4 2021. As for earnings per share on a GAAP basis, of course, on a GAAP basis, this is a loss, which is the first one in a long time, which shouldn't surprise you, right? We had that huge cycle during the pandemic, then cycle is over. So on a GAAP basis, profitability goes down. On a non-GAAP basis, we're still positive here, so 60 cents. It's down 43% year over year though, and it's down quarter over quarter as well. Now, as for the balance sheet, they actually increased the cash equivalents by just 1% quarter over quarter, but inventory is up 12%. They say here inventories are up quarter over quarter, primarily in anticipation of the ramp of new data center and client products in advanced process nodes. Keep an eye on this in the next quarter to see if it decreases. Then, if we have a look at each segment, so data center, net revenue is flat year over year. Operating income for data center has actually plummeted 65% year over year. As for client, not surprised there, down 65% to just $739 million. And operating loss here is, well, $172 million of a loss. It's down 125%. Again, we saw it coming if you listen to Intel's earnings report and earnings call in the last quarter, this quarter as well. And for AMD, was pretty predictable as well. As for the gaming segment, that's down just 6% year over year to $1.75 billion. As for operating income, down 12% to $314 million. As for embedded, of course, that's now the first full quarter of Xilinx, so a huge increase here, 163% year over year for net revenue and 188% for operating income. Now, as for the impact here in data center on operating margin, they say here this is primarily due to product mix and increased R&D investments. Makes sense. As for the gaming segment, the small increase here is primarily due to lower gaming graphics revenue. Now, if you look at financial outlook on a non-GAAP basis, they expect revenue to be approximately $5.3 billion, a decrease of 19% year over year, gross margin 50%, operating expenses of around $1.6 billion. And then if we look at the fiscal year 2023, Data center and embedded segments expected to grow year over year. For gross margin to be flat-ish in the first quarter, but expansion in the in the second half of the year, sorry. And then as for operating expenses, flattish quarterly until the demand environment improves. So that's one way to control profitability. Now, if we look at the graph currently with the stock being down around 3% or so, we might see it revisit here $84, which should sit just over that 200-day moving average. Of course, you all know, if it doesn't hold the 200-day moving average, then yes, expect it to go lower. Currently, RSI is 56, no danger just yet. MACD still bullish there, although tomorrow, if the market opens and it's red 3%, maybe even more, then yes, it might be flat-ish on the MACD. Could flirt with being bearish. So keep an eye on that if you're in for a trade or if you're looking for a better entry point. Now keep in mind that this stock was trading before this report at 30 times forward PE. Of course, that number is increasing right now. Overall, yes, revenue keeps going up, especially if you look at the last 12 months, will keep going up. But right now, as we've seen, because we're in this down cycle, we might see it reaccelerate towards the end of the year, but of course profitability is taking a hit and it shows. So to conclude, I don't own AMD, but to be honest, to be expected, this report, I mean, we could have seen this from a mile away if you just listen to other semiconductor players in the industry. This was bound to happen. Most of them are seeing some progress in the industry. That's why they are putting their hopes on the second half of the year that should be much better. Now it's just a waiting game. Wait and see if that actually happens. Maybe that's why the market right now is taking a step back and saying, okay, let's maybe first look if something improves and then we'll revisit this. Of course, do share your thoughts down in the comments below. What do you think about this quarter? Let me know down in the comments. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.